It's me Pavitran here. Today we're gonna do a weekly forecast of coming week. Let me start with a recap of what last week levels and how it has been played out. So these are the for educational purposes. I have just drawn the level. I have marked the support and resistance level, which is taken a major support and major resistance over these regions. Maybe you will get a quite an understanding. See, this is the let me start from the left side, and this is the major resistant one, the first one, and from here the fall has triggered till $31 level. From here it took support, again it went to the same region and it took resistance over there, then again it came to the same region and took support. After that it again went to the same region, took resistance, then came here. Then once it break off that level, will get transformed into a support one. See, it had retested here and then it started to go up. Even after breaking the new one, it just went all the way up here, then it again came, tested that level, then it again went till $40 level. So what we should keep in mind is that the origin of the level, this is the first origin of this level, and this one the second one, it went up and came down. So this is the origin of this $40 level. As you can see, while moving to my right, you can see the same region which was an origin of the previous rally, previous swing. It has taken support over here, then it tried to push market to 39, then from there it fell. Once that it breaks off, it again goes to the previous low. As you can see, this was the previous zone, the resistant one, somewhere around 34.50 level. It took a resistant here, and once it breaks off support, right now the price comes here, it will take support automatically. Then this is the region where it get broke off. See, that region is acting as a resistor. Then price comes down here again to 34. If it had broken this, then the next region will be somewhere around 32 and 31. So price did not break that, it took again support there. See, it started rallying from here again. Once it breaks that $37 level, that will be acting as a support for time being until it's get broken. This one, it again took support here, went all the way up here, then again came down, again took support there. As you can see, we'll zoom it in, what had happened on the last week. So if you can see the structure, which is the market sentiment which has formed here, consider this as an higher low, and market is forming higher low, and right now it was struggling here. I thought that it will just break this level. Once it break this level, then 34 will be taken out, but it has taken support here, then it went all the way up here. In this meantime, it was taking higher highs and higher lows also in the cards. The market sentiment clearly was bullish. That was before the previous level has happened. So what I was trying to say on previous week was, if the 40.50 level is taken out, then bulls will be in action on Monday. This was on Monday, it opened at positive note. It tried to go above the region because Friday sell off has came because of rollovers and profit booking on expiries. That was the main reason according to Indian market. I actually don't know about the US chart, what is the exact reason for the sell off. Since it was an expiry, profit booking and rollover of the contracts happened in Indian market. That was the reason for that. So based on that, I was expecting some sell off whenever the price tries to go above. As I said, the bearish divergence will be in formation once there is a close below the previous day close. So I was expecting somewhere around Tuesday to Wednesday, close will be happening, then bearish divergence will be on the cards. I will show you that how the bearish divergence has formed. Just wait for a few minutes before I conclude this last week recap. it took support at 39, then it made a strong rally. I said on a 4 hour candle it closed somewhere around here, I think 4 hour candle. Once it closed above 40.50 level, then you can see the bulls try to take over. This was the region on the same 4 hour candle at exactly at 23rd, around Wednesday. You find the bearish engulfing candle to the previous 4 hour candle, so that was a quite maybe a clue that market is going to start a fall off. Same way it has happened. As you can see, it closed beautifully below this region, and it again took a resistance. Once this level gets broken, they took strong resistant at this region. How we are confirming it as a strong resistant region is because of the price action. See, at this region, this was the candle at 11:30 which closed on a bullish zone. See, the next 1 hour candle, it faced a full bearish Marboso type candle. So this was a clear indication that it's taking resistance over this. So this region will be start acting as an resistance. We can't able to see any break in upward direction. And you can see the follow through one. What is the next level which we will be taking as an support is that as you can see previously, there was a 3 eclipse which I have drawn over here. This was the region which was acting as a support. So in this region, the same way I was expecting it to take support here. Then if it breaks this 40, then it will shoot up, or else we will be seeing a fall. I was expecting that, and the same way to my expectation, a big red candle came. That was nearly kind of an bearish engulfing candle which had happened over there, and as you can see the fall. And right now if you go back to the stance where it has again taken a support region, you can see the three, or maybe you can see five. Yeah, it has taken support at 5 different occasions. This is the first one. This is the second eclipse, so the second place where it has taken support. Once that level gets broken, then it took resistance, and then as usual, after breaking that level becomes a buying zone over here. And while price was traveling from $39 level to 37, I was expecting price will take support, then it will go near this level, or if it breaks this, then it will go till 41.50. But on Friday it took resistance again in this region. If you can observe this very closely, the important levels, see, 1, 2, 3, 4, and the fifth zone, now it has acted as a resistance. So this region will be acting as a support whenever price comes. So until any of the region gets broken on a coming week, will be acting as a crucial one. 39.30 level, 37 level. Say for example, I'll give you two instances. What and all might happen. Once 37 is taken out, then a strong bounce will be coming at 34.50 level. Why? Because see, in this region, this was the rally, here rally, here rally, here rally. And why I am not mentioning 35.80 as a strong one is that there was not there hasn't been any strong support or resistance which it had taken at that level for a strong rally. If you all can see this region from here, the rally has started, the origin of the rally. And again from here, whenever price tries to take reversal, we can easily book $2 to $3. Here again $2. Once price breaks off this rally, then as you can see 34.50, here 34.50 it took support. See, $2 to $3 rally came, and again same way is price took off that support over there, and we can see somewhere around $1.50 rally. Again price tested here, then you can see 2 to 3. So I'm just marking the zones which has been origin of a new rally which gives nearly $2 to $3 range for us. So you can trade whenever price when comes near to this region. If it's taking support, you can just take the trade after a price action confirmation. What's your target is $2 to $3 range. You can either close your position at 39, or you can just close your position at 40 or 41. So similarly, when price tries to come near this region at 34.50, you can look for price action confirmation. Then what you can expect is that first place you should be expecting is $37 range, and after that, if price sustains above the region, then 39 is on the cards. So I'm just marked the zones where price has taken a huge support over there, or we can say huge buying pressure will be coming over that region. um, we can't able to exactly say whether it will come or not, only price action, and at that time it can be determined. As you can see in previous instance is that it has given a price action confirmation by breaking the previous high. So you can just get in a trade, and you can trail your profits, or if you are patient trader, you just hold with your stop loss and you can book profit here. So these are the small instance or small nuances you can try with this kind of levels which you have been playing. So you can increase your profitability with a small stop loss, and you can just book $2 to $3 of profits based on the lot size. You will be rewarded more. So you will be, once if it has taken support over there with the price action, the candle which has taken support will be acting as a stop loss for us. For our instance, this is the candle which has taken support, or even consider this is the candle, this is the origin of the candle. Actually this is a clear indication for us. If you had went long or here or in the retracement, you will be in the trade. Once the $37 level breaks, you should be waiting for that. If it has not broken, then you would have pocketed somewhere around $2. So this is the kind of the trade you should be looking out, or this is the kind of setup you should be looking out for. And I will be explaining the bearish divergence which I was explaining last week. So the bearish divergence, I was explaining that it will be coming somewhere around Tuesday, I was hoping. As you can see, price was making higher rise, but as you can see, RSI was making lower lows. So there is a clear cut of divergence. And Tuesday on Tuesday there is a strong confirmation. See, you can see the close on Monday. Close was somewhere around 40.55 levels, and see the close on Tuesday 39.97 level. So that is a confirmation for the bearish divergence. Until the high of the Tuesday candle is taken out, market will be in bearish mode. So that is the level which I was expecting. The same way it had respected that bearish divergence so well, and we have seen a quite a fall. Now what we should be focused on, what are the levels you should be concerned, is that market is started to play in a range. The big range is coming to the market is last week high 41.60 levels, and 2 weeks low, somewhere around 37 and 34.50 level. So this is the range you should be concerned with. I was expecting if market closes above 39.30, then we will be seeing 40.40, and luckily 41.50. But if that fails, then if 37 is taken out clearly, then odds of touching 34.50 and even 32 $31 is very much on the cards. And as you can see, the 35.80 will be acting as a quite a support in intraday basis. But if you can look out for positional ones, the two that level is not that much of a demand zone compared to the previous zones at 37 and 34.50. So you can just keep this as a reference. If it takes support here, then you can go for it. But to me it's not as strong as 34.50 level. So I will be skipping that level. I won't be taking into consideration if I am trading positionally. But if I am trading for intraday, then I will consider this region, because whenever price comes near, buying order will be placed, or buying pressure will suddenly be coming once the price crosses or triggers this 35.80 level. Some of the buying zones, these are the buying zones which will push the market higher. Fundamentally, crude is, as I have been saying for the last 4 weeks, fundamentally, crude is not that much strong for the rally. Whenever there is a strong rally on upward direction, you can always expect a fall. So, my strategy clearly will be sell on rise until and unless crude crosses $60 level. So until then, I will try to keep on shorting the market whenever I find the opportunity in positionally. On intraday basis, I always play with the levels which I have shared in the daily videos. My positional bias won't be clouding my judgment in intraday views. So that shouldn't be the case for you guys. If you're trading, if you're asking for what is the trend you should be focusing on, a simple answer is that what is the time frame you should be looking out for. Say if I'm explaining all the videos for a weekly forecast on a weekly basis, but I'm explaining you where and all the major support and resistance will come based on 30 minutes time frame. So you shouldn't be confused with view that once 39 breaks, then 43, 50, 60, 70 is on the cards. No, that is not the case. For a bullish confirmation on a weekly chart, I need a strong close above 41.50 level, the 2 on and 4 hourly candle close, or daily candle close above this region. Then only I will change my view from sell to buy for coming 2 to 3 days. So that is the positional week. This is the positional trade you should be looking at. On a weekly basis, crude is still weak, but in intraday it can go for a buy, right? So you should not be getting confused with the time frame differences and the trend. If you want to know the trend, check in whatever time frame you are trading. That is a trend. See, on a 30 minutes time frame, its market is sell on rise. Same way, it's right now it has formed a higher high. So this is the higher high, this is the higher low. When compared to this, if you draw the trend line based on the opening of Monday, we can determine whether this is a bullish zone, will it get formed as a bullish one, or the bearish zone will get continue. So you should not be having this biased situation and converting that into on a daily basis. Daily basis, it's clearly a sell. So whenever price is going for a buy on a 30 minutes, you should not be shorting the market. So you should have a clear clarification or a clear analysis that based on the trend, based on the time frame, you have to stick with the trend. You should not be confusing with the longer term trends with the shorter ones. Every time frame is different. You can trade both buy and a sell on every time frame. So you should not be confusing with the longer time frames with the shorter ones. Every time frames has an individual uniqueness. So you should not be mixing, and you should not be trying to come into judgment. Having a view is okay, but it should not cloud our judgment. So the levels you should be looking out clearly for coming week is that once it closes 37 on a 4 hour candle, then we will be starting to see 34.50 and $30 levels. On the buy side, as usual, the range bull for bulls to come into action, I need a strong close above 41.50 for 42 and 43. My maximum will be target is 43 to 45. So these are the region you should be watching out very carefully. Trade accordingly. Trade with the levels. Thank you.